Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day market recap for Thursday, the 12th of October. Don't forget, tomorrow is Friday the 13th. We'll see if we get a spooky October, Friday the 13th. Maybe good to watch some horror movies. There's a lot of red on the screen today. Kind of felt like a Friday the 13th, considering all this red on the screen. So clearly, there were some interesting things that happened today, some themes, and I will go over those in this video, and we'll try to come away with a few takeaways. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving any advice or recommendations. Please read the full risk disclaimer right there. So let's start with the beginning of the day, which kind of seems like a while ago at this point. It seems like it was a long day. Sorry, not CPI. What I want the economics. So, the numbers that came out today, CPI month over month, 0.4 versus 0.3, ex food and energy, right in line with expectations. The year over year, very close to that survey number of 3.6 came 3.7. It was very close to what happened yesterday with PPI, right? So, why did the market kind of freak out with these numbers a little bit? I don't have the answer for you. Maybe the fact that the market puts more weight behind the CPI number rather than the PPI. I don't know. But yesterday markets were resilient and they did bounce back at the end of the day. But whenever we have economic stats out, or just in general, looking at what has been, headwinds for equities over the last few months, mainly in August and September, have been higher interest rates as well as a stronger dollar. And those things were basically like rocket ships today. Very, very big move today in bond yields. And again, when we talk about bond yields, it's not just what the Fed controls, right? It's what we're seeing on the long end of the curve. And look at the move. And speaking of, let's see if hopefully you can see this. By the way, if the video is ever blurry, it's just because it hasn't finished rendering yet on YouTube. But so there you go. Like the 10-year was up 13 basis points, the 20 up 15 basis points. So again, like these are very abnormal type moves. And we're looking here at the 10-year, which is at 4.7. The short end of the curve moved too, but not as much. And did the CPI report move the expectations for a rate hike for November? A little bit. I think we were at around like an 8%. I mean, this is kind of splitting hairs a little bit, because it was only an 8% chance that the Fed fund futures were signaling that an interest rate hike is coming for the November Fed meeting, and it did move to 12%. This moved up a bit too, because I think this was around like maybe below 30 chance of a December hike, and now that's at a 38% chance. So again, remember, when we're looking at this and what the Fed controls, it's the very short end of the curve. It's the overnight rate, right? But what TLT is doing, that's a different interest rate. The Fed doesn't really control that directly. Now, they are doing some things like decreasing the size of the balance sheet. And, so that was a big thing today. And, I don't normally look at bond auctions other than, so I don't trade bond auctions. I mean, you're really kind of getting into the weeds if you're looking at bond auctions. But I do pay attention a little bit, because we know that, when interest rates are moving like they're moving, right, you want to be mindful that something could be a catalyst for a bigger move, right? And just because, I explained this a little bit on Twitter, and I got some good feedback on it, but, from time to time, correlations will pick up when things like bonds move very quickly, when things like oil move very quickly, right? Really, really quickly. And we haven't really seen that too much this year, maybe more last year. But, so as soon as bond yields start to move up, the VIX will move up. And again, like the VIX has nothing to do, the VIX doesn't measure what's going on in the bond market. It measures short-term implied volatility in the S&P. However, it's such a translation over now with the correlation moving as it is, that as soon as you see bond yields move up like they did, and here's TLT, for example, which this is a big day, right? Down 2.7%. Right, is a big day, and you could see exactly. Now this is weak all session, but it really accelerated, right, and it brought down the S&P. Right, you're going to see it's, obviously this started, yeah, this was right at 1 o'clock, right? So same time, even though bonds were selling off prior to that, right? But it really accelerated here, and it just really took down equities, right? Here's where you began to sell off. So again, that's why I continue to say, that bonds are a must watch. I hate to devote so much time in these videos, as well as in my trading room, that into bonds, because I would rather be focusing more on the micro than the macro. But it is what it is. This is we can't pick and choose what we have. So let's talk about that. So let me transition here a little bit. And I think also, I mentioned a couple takeaways, right? And clearly we've had a nice rise in bond prices from the low, right? I've talked about how that I thought we could get a reversal off of this last virgin point of control in TLT, but you had overhead resistance. I thought maybe we could rally a little bit further into 89.49, but price didn't want to get over its 20-day moving average. That's why I have things like the 5-period and the 20-day moving average on my charts, because it tells you, it helps you to determine the trend and where there might be some overhead resistance or support. Right. So some people say that they don't use moving averages. That's fine if whatever works for you. But I just feel like you get so many signals off of the 5-day and the 20-day moving average if you're a shorter term trader. Again, don't have to be a day trader, but just in terms of swing trading, right? The 5 and the 20-day moving average tell you a lot of information. So we did not, we're not back to the lows, but what I would like, the takeaway here is I would really like to see this not go down and test those lows again. If this can somehow hang out here and just go sideways a bit, I think that would be great, and I think the market will get used to that. But if we continue to have another big down day like that, the market's not going to take, I don't make a lot of predictions here, but if yields go higher, similarly to what they did today, or even just down like another 1%, equities are going to sell off, right? They're just not going to take kindly to that. If it's a flat day or just a slightly down day, then the market may be able to get over it, right? And then conversely, I had mentioned this to several people who I saw on Twitter. People were talking about, oh, this is a trend line break in the US dollar. I'm like, no, it's not. It's just a move back to the top of the value area. And again, here's the 20-day moving average, right? So another one. So this we talked about in a downtrend with what bonds are doing. The US dollar is in an uptrend, and this found support right at the, even if you don't have the value areas on your screen, the 20-day moving average also gave you a good clue. So be careful with people who say, oh my God, it's a trend break and we're going, like the dollar's going the other way, is going down lower. It came right into support right the whole time, and I tweeted this out yesterday too, and I said, hey, I think we had 5 days of declines in the dollar, but price right into a major support level, right into that top of value area for October. So again, that's a big move. Look at the small movements down here in the dollar over the last week, and then boom, one day it retraces all of these candles. So I have said for a while that I think that we're going up to this 3017 level, so I won't be surprised if that gets taken out. The slower it happens, the better for equity investors. Again, don't want to see big volatility in the dollar either, right? So those are some big things to watch. Again, I wish it wasn't the same. I wish it wasn't so, but if you're not watching what the dollar is doing and what bonds are doing, you're really you're not preparing yourself, for what this market is. And I get it. Like I said, I would want to just be focusing on single stocks too, but you're getting such information about the next move in equities based on what the two of those things are doing. So where are we at this point, right? I thought, full disclosure, I thought we would have a digestion day yesterday, and in the market. We didn't get that, so today was, I wouldn't call today necessarily a digestion day, but one thing that's not bad here is we're holding on to the value area for the month of October. We came in and we tested it, right? We broke below intraday, but we're holding above 43.69.75. That's a great level to watch, right? I'm not going to go any further here in S&P. I think that's the best level to watch. Qs, I think this is going to be interesting because, yeah, I see this in a lot of charts. I just talked about that on Twitter about SMH, right? But we've had this nice move from the lows. The question is, are we going to be able to overcome and this little pattern here of lower highs, right? And you could see this all over the place. So, for example, right, this is what I just tweeted out. SMH semis, by the way, were super strong today, right? A lot of things, right, got shellacked today, right? And the breadth was horrible today. You could see how many areas were down over, well over 2.5% today. There's a handful of these names. So, again, anything interest rate sensitive, like solar stocks, that's been the story with them all year long. Higher interest rates, solar stocks don't like that. They get hit the hardest. Same thing with the biotech group, right? And home builders too are now succumbing to it. Look at how much the home builders were down today. ITB was down 4.6%. So when you put that in perspective, what the semis did today, a positive day, looking at this chart, you're like, that's not bad, up 0.5%. Didn't close on the highs, but certainly some relative strength there. Now, the main thing is this did close above the value area, but is price going to be able to get above the last high? I think that is a major question. And so that's the semis, but I could show you like 5 other charts like that. Apple's a little bit of a deeper, pull back from this last move down. This has made a nice move up. So you have to ask yourself, after all those green bars, what are you going to do now? Are you looking to add risk here, or are you waiting for some digestion? Personally, and that's a question for anybody individually, but I would say for something like this, maybe a little bit of backing and filling and going sideways, right? And you would want to see a shallow move here. You don't want to see a whole retracement back to the value area. But we are getting closer to earnings, right? And a lot of these names are going to be reporting earnings. And then Tesla's another one too, right? Again, they're not exactly the same chart, but this one's closer up maybe to the Qs, but same thing. And this one is already kind of revealing itself a little bit. It did get rejected at that 266 level. Now, again, it's had a nice run. So put things in perspective. I'm going to use the P word here. I think you got to be patient here. So for me, I was talking about this at the end of the day with Tesla. I said, hey, I'm happy to get long Tesla, provided that it gives you a nice, powerful close above that 266.22. So that's how most charts look to me, is that I think at this point, a little bit of rest is not bad. You just want to keep an eye on those interest rates and what the dollar is doing, and we don't want to see rates or the dollar scream higher. A couple other charts. I thought I had tried to play Nvidia today because it was just acting so well, right? So again, this is a different chart altogether. You don't know what this is going to be so far, right? You could say, oh my God, there could be a head and shoulders forming here, but a head and shoulders, a lot of charts could look like head and shoulders, but they're not a head and shoulders until they break a neckline. So, watch what it does here right around the top of value. If it can hang out here and back and fill a little bit above 462, right, then I think that's good. But if it starts testing down here, right, then it's another scenario that you have to go through. But yeah, it's an odd looking chart. And by the way, this move up, right? This hasn't stalled yet. I wouldn't call today a stall. It was up today. So, you know, in my opinion, again, I'll say it, like, don't jump to conclusions. You're not even below the 5-period moving average. So you're still ascending up here. A couple of the other, you know, semi names I thought were interesting. Lamb Research saw some calls today, but a lot of these things went right to resistance, and you know, that was one move that I made today that was correct. I was like, I looked at Lamb Research and it was up about 3%, and I'm like, I'm not chasing that, even though there was short-term calls on the tape. So I would watch 661. Again, that name's going to have earnings very soon. SMCI, this is one that I did lose money in today. This looks such a nice consolidation here. And unfortunately, it turned, and now this kind of looks like I believe that's an evening star pattern. So, you know, it did go a little bit further than this Virgin point of control. That was my first target. I was just very impressed with this, how it was able to overcome it. But, you know, look at the return back here, right? Again, I listen, I got a little fooled with this one. I thought we were going to I thought this thing was going to get to 621 today. It didn't, and it got a decent rejection. I would also note where we are there, 290.94, right? So even though that's a very ugly looking couple, you know, day, it does not broken support, which is right around that 290.94 level. All right. Another name that I got into, you know, again, I just really didn't want to get involved in anything that was too green for the day. But this, I think this Spotify looks very interesting, and I tweeted this one out. I made sure when I said, hey, it's breaking the October value area, but I put in parentheses intraday, because sometimes charts can look really good in the first couple hours of the day, and I just had a feeling that this wasn't going to close out of value. And the breadth, by the way, was weak when we started the day too. So one other point that I'll make here, and go through maybe one or two more charts here, because I thought Google actually held in there pretty nicely for the day. You know, pushed back in here to the top of value. That's a name that I'll be watching tomorrow. Meta, I'm long a very small piece. I'm being a little bit greedy here because this did take out my my upside price target right in here. But so yes, this was at 328. So I took the majority of my position off. I'm holding a small piece, but if it starts to really kind of move back a bit, then you'll see me take the position off. But yeah, it's going to be very interesting. All these names are going to be reporting in a couple weeks. So now that they've had some move to them, you know, which we'll see which names are going to be your standouts after earnings. The other thing too is, you know, looking how well these names are holding up. You know, I have to think too that, you know, it has something to do with interest rates. Many of these companies, like an Apple, are sitting on a lot of cash. Right, they're probably not as worried about higher interest rates, you know, maybe for their end consumer, but as far as their company is, like, they're sitting on a mountain of cash, right? They'll actually make money, you know, from as interest rates are going higher. And some of the other names too, you know, the bigger internet names, right? They're in pretty good, you know, conditions. So I think that's an interesting tell right now on this market, because there's a lot of things, you know, you know, I thought that the IWM would stall out yesterday at that 1 hour VPOC, and it certainly did right in here. Right. And this is the weakest, right? And most sensitive, I think, to interest rates as well. All right, guys. So that is it. You know, those are some takeaways. I think there's a lot of names to watch. I think we've been on a nice run, so backing and filling a little bit is not that bad. And I think we'll need to see that volatility go down in what bonds are doing, and what what currencies are doing. I was just going to mention the other thing too is just the destruction that's going on in some of these areas of the market because of the Lilly drug and the Novo Nordisk, the weight loss drugs. It's crazy what's going on to some of these consumer staples names. They are really selling these names off. Look at Hormel, was down almost 10% today. LW, which is another name, like Lamb Weston, right? Don't they make French fries or something? They're down over 8%. Kraft Heinz, 5%. Hershey's, just amazing, right? And again, it really kind of backs up my system that once a name starts to get into a downtrend, like do not buy the, in my opinion, don't buy the dip, right, until it gets out of its downtrend. But look at this thing for, this is how simple can help save you, right? Look at the break. Let's just say the break of the 200-day moving average. That was at 240, right? That's a clue to say something is majorly changing with the stock, right? And since then it has been straight down. Right, there's no buying the dip in this name yet. I mean, it's just it's liquidation, and all the way down to 187. So, would I touch this here? No, right? Because who know? How could you predict, right, how much further this is going to go down? Right? Don't predict. Right? Wait for some price confirmation. So, in any event, guys, have a great night. See you tomorrow.